Hello, everyone. Welcome to this special Flash webinar where we'll go over the imminent IPO of Kioxia. I hope I'm pronouncing that right. This is the Japanese flash memory maker, formerly known as Toshiba Memory, and latest Japanese markets hopeful. For this discussion, I'm joined with a great panel of insight providers. Jim Handy has over 35 years in the electronics industry, including 20 years as a leading semiconductor and SSD industry analyst. Mio Kato is the founder of Lightstream Research and has over 15 years of experience looking at Japanese and Asian cyclically driven sectors such as gaming, factory automation, automobiles, and tech. Scott Foster is a securities analyst covering electronics, precision equipment, engineering, construction, and other sectors for more than 25 years in Japan and 3 years in Korea. And we are waiting to also be joined. Hello, Liam.
Hey, I made it. Sorry, guys, some technical troubles.
No worries at all. William is a highly experienced analyst and senior executive with over 25 years of experience in the IT and semiconductor industry. Gentlemen, welcome. Thank you very much for lending me your time this morning. So before we get into it, some quick housekeeping. The audience is welcome to send in questions for our speakers using the Q&A button on the bottom of your screen. And please do not reshare or reproduce the contents of this webinar without express permission. We will have, as always, a recording of this webinar available afterwards. And with that, gentlemen, let's get right into it. We don't have a great deal of time and maybe quite a bit to get through. So I would like to start with a bit of an overview on Kioxia and its bid for the public markets. Jim, maybe I can start with you, and maybe you could give us an idea of the company and sort of where it stands in its sector.
Something very interesting about this company is that, and I won't try to pronounce it, is that it's actually the inventor of flash memory. Back in the 1980s, they created the technology. They weren't the first to bring it to market. Intel actually was. But once Toshiba jumped into it with the help of SanDisk, they became a big power in the marketplace. The only reason why they were really outstripped by Samsung was because Samsung overbuilt fabs during the internet bubble burst, or during the bubble, and so they had extra capacity, and they very rapidly overtook Toshiba in their production capacity. Still, the two companies are about neck and neck with each other. 33% of the market for Toshiba's total output, if you count what they ship through Western Digital, and 34% for Samsung. So, you know, they're both the superpowers of the marketplace. Kioxia is in, well, I pronounced it.
It sounded fine, I think.
Yeah, except I heard a presenter earlier today saying Kioxia. So, and this was somebody from the company. So I don't think even within the company they know how to pronounce it. But the company is in this relationship with Western Digital that started with them being in the relationship with SanDisk that really propelled them to greatness. The two companies played very well off of each other. And that relationship continues strong. It's probably going to go for a long time further. Both of them contribute capital to the manufacturing plants, both contribute intellectual property and design work. And then they just split the output of the manufacturing plant. It's been a little bit better of an opportunity for Western Digital, who doesn't own the plant. And I've written some Smartkarma insights that go into that as to why Western Digital gets better advantage out of this deal than Kioxia does. But still, both companies do very well by it.
Yeah, it should be pretty interesting. And I think perhaps if before we go into the deal proper, maybe Jim and maybe Liam as well could give us a bit of an overview on the broader flash memory market. It's gone through various ups and downs, and the COVID-19 crisis did not help things perhaps during the first quarter. But where do we stand now, and how does that sort of affect the company?
Why don't we let Liam say, since I gab so much?
I could give a couple of quick comments on that. So first of all, we're in interesting times, right? For the first 2 quarters of this year, NAND ASPs actually grew for all of the 3 major players in the segment. So, you know, most of us would have looked at the results at the end of Q2 and said, okay, we're in a recovery phase. Prices had been dropping for pretty much all of last year. And most of the NAND manufacturers were losing money actually throughout the last couple of quarters. We're not quite sure about Samsung, but certainly you can see Kioxia's numbers. They were losing money. Western Digital lost money for 3 quarters in a row. Intel lost money. Their first profit-making quarter for memory or for NAND was this past quarter. So I guess when we looked at the results at the end of Q2, we would have thought, okay, I think we're in a recovery phase. It's been 2 quarters of consistent ASP growth. But then Western Digital had their results, and even though their numbers were quite good, their outlook was downbeat. And then Micron came out and said, our forecast for the current quarter, we're not going to hit our numbers. So obviously things changed during the last weeks of the second quarter. As things stand today, there's more bad news on the horizon. We use a company called ASpeed. It's a Taiwanese company that makes what we call BMCs, baseband controllers for servers. And that company has about 70% market share worldwide for servers. And because it's a Taiwan company, they publish their revenue numbers every month. So that means during the quarter, you get a little insight into how things were going. And up until August, so they published their August numbers about 2 weeks ago. And up until August, so through July, their sales were up more than 50% year on year. So huge growth in that, you know, that translates into server sales. So there's been huge growth in server sales. Remarkable growth, and we all kind of know the reasons why, right? The build out of data centers. However, in August, the numbers fell 30% month on month. So a huge drop in August. And I was on a call with their investor relations just Monday this week. What they said was that, yeah, they started to see the numbers fall off very rapidly in late, starting in late June, I guess. And now they are forecasting for the year as a whole that their servers, that their revenues will be about 15 to 20% up year on year. So if you figure that at the end of July, they were up more than 50%, and now they're saying that for the year as a whole, it'll be 15 to 20%. What that means basically is that server sales are going to fall off a cliff. They'll still be, you know, solidly up year on year, but we have bad news coming in the coming, there's about a 3 to 4 month time lag between when they ship a BMC and it gets into a server in a data center. And there's reasons why it's so long, and it's gotten even longer. So if server sales are going to fall, so too will DRAM sales and of course NAND sales. So I have this feeling that we're in for a rocky 2-3 quarters. So probably most evident in the fourth quarter of this year and the first and second quarters of next year. We're definitely entering a digestion phase, and that spells trouble for both DRAM and NAND. So on the one hand, this tells us that the timing of this deal, it's a glass half empty, glass half full. The half empty part is just what I've said, that we're in for a rough period when it comes to NAND pricing, and we may see companies dip into negative territory again. But on the other hand, if you look at Western Digital, for example, their share price is down 50% from the 52-week high. So that's the glass half full. So investors may be getting quite a good deal and buying in at not quite the bottom end of the cycle, but certainly close to the bottom. And for that reason, many people should be interested to take a look at this. And as I said, Western Digital is particularly interesting right now because there really isn't a great reason for their share price to be down 50% year on year. My 2 cents.
Much appreciated. Yeah, I think maybe given these conditions and considering that Kioxia itself has lowered its IPO price range, Mio, maybe you can maybe take us through the IPO deal as it stands sort of now, and perhaps you wrote a very interesting piece comparing Kioxia to some suggested peers. So maybe you can take us through that under these circumstances.
Sure. So yeah, I think from our perspective, the main obstacle to the deal is simply valuation. I think as Liam noted and as Jim has also commented in some of his insights, the outlook for NAND flash in the short term was looking really good, I think, at the time that the deal was first proposed or announced, or slightly before that. But it's deteriorated quite quickly, and I think that's kind of unlucky for Toshiba in a way. But what that means now is that if you compare the implied valuations that Kioxia is trying to list at, it looks significantly more expensive than peers, particularly because, as William also noted, its operating margins have actually underperformed peers recently. So there's a lot to be concerned with the company, even relative to peers. And yet, when you look at Samsung, Micron, Western Digital, Hynix, they're generally trading at EV/EBITDA multiples that range from sort of high 3s to mid 5s. And if you value Toshiba at, say, 4.5 or 5 times EV/EBITDA, that would give you a price that's significantly lower than the implied IPO price range. If you assume that EBITDA margins were anything similar to what they generated in 2019 or even 2018 when conditions were actually very good. So Kioxia generally generates a top line of about 1 trillion yen or thereabouts. So that should grow slowly. But the EBITDA margin in 2018, I think, was 38%. So on that 1 trillion number, if they generated 350 or 400 billion yen in operating profit, which would give you a 35-40% margin, and you apply a 5 times EV/EBITDA multiple to that, you get to about 2 trillion yen in EV at the top end. So, you know, that shows that some of the numbers that they were initially looking at, like a 3 trillion yen EV, were just exceedingly optimistic. So that's our main concern with this IPO, is just the valuation looks extremely stretched. And my suspicion is that a lot of this is simply Bain and perhaps to an extent Toshiba wanting to get out at relatively rich valuations. So for Toshiba in particular, I think they themselves are under pressure from their investors to raise cash and possibly do another buyback. I think there are a lot of activists that you know, I've described as being stuck in Toshiba, looking for a way to actually get out. So one potential way to do that would actually be to get a good price on Kioxia and then use that money to actually buy out activists who are stuck long in Toshiba. That's one angle. Of course, Bain as well wants to get a good return on their investment, which is understandable. But one risk from this shareholder base, I think, is that in trying to get a high multiple and also in restricting the amount of new shares that Kioxia is selling into the market in this IPO, I think it risks making the company undercapitalized. And I think that has big potential implications for the long-term future of the company in terms of its ability to invest in CapEx and keep up with companies like Samsung. As Jim mentioned, you know, if they lost significant market share to Samsung during the initial tech bubble, if we see a similar pattern here where Kioxia underinvests, you know, they could lose their lead entirely. So that's not a particularly optimistic scenario when you look forward. And not just in terms of capacity, but also in terms of technology. Toshiba at the time, Kioxia now, tended to be one of the leaders in terms of migrating to new nodes or developing the highest density. But just looking through their history on their website, you can see that those milestones are fewer and far between as you look at more recent times. So if they don't have the capital to kind of make the investments to catch up again, that puts them in a pretty bad position from my perspective. And I think it would actually be useful to get Jim and Liam's perspective on this, because you know, from the financial perspective, I think it's pretty clear that they're a lot more indebted than their peers, and that they just don't have as much cash to spend. So from their perspective, I mean, if they do feel that you know, there are signs of Kioxia not quite keeping up in the technology race, I think that would be a reason for investors to actually value Kioxia at a discount rather than a premium to its peers.
I think things are a little complicated at the moment on the technology landscape as far as 3D NAND is concerned, because we have Micron going through the migration of their technology from floating gate to charge trap. And right about now, they're releasing the first products on their charge trap technology. They don't call it charge trap, but it's basically charge trap.
Replacement gate.
Sorry?
It's replacement gate.
Replacement gate, yeah, replacement gate. So I've written about this before, and I think, and maybe obviously Jim, you comment on this as well, but I think it's actually quite a risky time for Micron. They're planning this transition in 2 phases. So the first phase, the first phase is happening right now. It's going to be low volume, so it's like test the waters, make sure everything's okay, and then the second generation, or the second phase, will come next year. And in the meantime, they're selling out of inventory that they've been stocking up for quite a while. And they've been relatively quiet about this. Now, I have no reason to believe they won't succeed, but if you look at it from a technology point of view across all the major players, I would say Samsung number 1, Toshiba number 2, and Micron number 3. So I don't see them being badly positioned from a technology point of view, and I don't really see evidence that they've fallen behind. But it is logical to assume that with all the turmoil over the last couple of years, that certainly doesn't help, you know, a company to maintain its focus. So I can certainly imagine that there are some issues there, but I couldn't specifically point to. I don't have specific knowledge of specific issues. Jim, what are your thoughts?
Oh, Mio had a really good point, and that was that not having the capital to invest can kill a semiconductor company. And Toshiba is kind of uniquely positioned that way, because all of these other companies have separate businesses that can be used to prop them up. You know, Samsung is a huge conglomerate. Micron has got their DRAM business. SK Hynix has their DRAM business, plus they've got SK Telecom to help them out if they have a problem. You know, Intel has got the rest of Intel, and Western Digital has got the hard drive business. And, you know, for Toshiba, it's just NAND flash. And so there is some exposure to risk there. If the NAND flash market continues to stay tight as it has been in the past, then that could be difficult for Toshiba, especially if they don't raise enough capital during their IPO to be able to continue their investments without finding other sources of funds.
I'd like to also come back to something that Mia also mentioned. So you mentioned that Toshiba shareholders might be sort of trapped with this IPO, and I think Scott, you also had some thoughts on that, I understand.
Yes. First, to follow on to what Jim just said, I covered Toshiba for many, many years, maybe too many years. And even when the NAND flash business was embedded within the Toshiba diverse group of businesses where they could have cross-subsidized it, they always managed to disappoint. There's something about the NAND flash business that Toshiba developed, and perhaps Jim got at it in his insight, something about the structure with the arrangements with Western Digital, that enabled over the years Toshiba to almost always disappoint, particularly in comparison with Samsung. That happened when the NAND flash business was embedded within Toshiba. Whether or not it will continue once it's completely independent is another story. I suspect that management independence is more important than having other divisions within the business supporting it financially. That doesn't mean that Mio doesn't have a very important point about relative cash flow strength. That seems to me also to be a very serious problem. And then also, Mio wrote about investors who have played this by trading in enough Toshiba or being long-term investors in Toshiba being stuck. And I would just like to point out that Toshiba has a dozen businesses in the energy systems, infrastructure, building construction, engineering, electronic device, retail, printing, and digital areas, information technology areas, in addition to NAND flash. And none of them are world leaders, except perhaps a NuFlare, but it's so small that it has no gearing. So if you're stuck in Toshiba, you're stuck in something that's geared to pretty much nothing. There's a better opportunity in almost every business they're in. So this is something that people should heed. And Mio has written at length about this, and so I would refer them to his insight.
There is a pretty strong line, though, dividing the NAND flash business from those other businesses. The other businesses can no longer be used to prop up any problems that they have with the NAND flash business.
Yes, that's true.
Mm-hmm.
Yeah, I think the point about Toshiba is kind of, it's worth thinking about in the sense that I think you can sense that both Liam and Jim are relatively positive on Toshiba in terms of its technological strengths. And actually, I've generally had the same impression, but my sort of suspicion or hunch has always been that perhaps it continued to disappoint simply because of mismanagement or inadequately strong management from Toshiba. So from that perspective, having the IPO could potentially open up the opportunity for the company to become better managed. And I think that is the upside scenario. But as I mentioned, the barrier to that is that Toshiba has certain interests which probably conflict with that. And at the same time, Bain has been reported to be quite unwilling to see its stake diluted, which again runs into the cash flow issue. So I think those are the big downside risks that investors should be aware of. If the company can somehow get around that and get both Toshiba and Bain sort of on board in terms of looking to build a long-term value of the business, I think you potentially could have a significantly stronger company emerging out of this. It's just that at present, that really doesn't look particularly likely.
Something that I'll add is, where are we in the market cycle? And Liam talked a bit about that and how prices firmed up and people thought that NAND flash was going to do very well. But SK hynix actually said in their earnings calls for the fourth quarter and first quarter that their NAND flash was losing money. And so they were looking forward to when they could reach break even for that business. That implies that everybody else who's making NAND flash is also having similar problems, perhaps not quite as bad as SK hynix is, but still the market is not enjoying the kind of profits that it would normally have. And if Kioxia could time its IPO better so that it wasn't timing it to coincide with a low profit or profitless part of the business cycle, they'd probably do better at raising money.
And speaking of, I guess, product cycles, we do see that, at least on the ground, we are seeing, of course, always new products from companies like Apple. we're on the verge of new gaming consoles from Sony and Microsoft, which use a lot of solid state drive components and flash memory. And of course, not to mention all kinds of other manufacturers that are coming online. Will these be a sort of tailwind for a company like Kioxia that is trying to go public right now? Or is it something that is not directly affecting things? And that's kind of a bit of a free-for-all, like anyone can take a stab.
I'll jump in. One of my favorite points of reference for how the industry is doing is the World Semiconductor Trade Statistics, WSTS. And this is just something that was put together by the semiconductor companies back in the 1970s, where they would all report what their revenues were by product type. And then eventually they got into more detail of how many unit shipments and also unit shipments by type. For everything that's made in semiconductors, this data is taken from all these manufacturers, and then independent accountant firms in each region pull together the data so that it can't be, you can't separate out who made how much of what. And then that's all pulled together into the World Trade Statistics. And that number has included gigabyte shipments of NAND flash since, I think, 2004. And it's been remarkably steady in its growth. You don't see seasonality, you don't see things that tie into products. The only places where you really see a bump in that number is when you have something like the 2008 global financial collapse, and then it goes down for a quarter and then pops back up where it was going before. We have had a little bit of that in recent months with some of the trade friction going on between China and the United States, where inventory was being bought in advance. And Liam referred to the digestion period for the latest phase of inventory build, because people in China who are buying these components or SSDs or whatever, they're not sure that their source of supply is going to be steady, and so they build inventory. Once they get comfortable with their inventory, they start to digest it. But for the most part, the growth in the business tends to be, very steady. And so because of that, when you see a new game console or you see a new launch of an Apple phone or something like that, it doesn't have much effect on the growth of the numbers.
Yeah. And I think the crazy thing about this business is that your the demand for the product that you're making is virtually guaranteed to grow at a CAGR of around 35 or whatever it is % a year. And it has done so for quite a while. So, it brings into question the whole commodity sort of treatment of companies like Micron and Kioxia and so on. We know for a fact how their business, how the demand for their products will be in the future. It will be huge. It will grow at 30+% a year, and that would probably just increase, right? I was explaining to someone there recently, I've started digitizing my life up to date, and I've been an avid photographer all my life. When I search for photos of me, aged below 10, I have one picture when I'm aged 4 at a family event. That's it. They just don't exist. Whereas my son, who was born 18 months ago, he probably has 100 pictures a day, not to mention videos. So it's just incredible how things have changed, and they're going to continue to change as this generation that are growing up now are addicted to their phones, their videos, their pictures, etc. So the demand is there, and I totally agree with Jim. Even though there are some things that you would think about as tailwinds, I don't really think they're going to make that much difference. And that's not a negative. It's just that, the demand is always going to be there, and it's probably going to grow. I think there's one other quick comment that I'd like to make with regard to just touching back to the management. It's interesting to see who's the chairman of Kioxia. It's a guy called Stacy Smith, and he used to be the CFO at Intel. And before he was CFO, he was CIO. And in that role, I knew him. We worked together quite a bit. And I would say his departure from Intel was quite surprising. He was very much in line to become a future CEO, and for various reasons that didn't happen. But I think what it does mean is that Kioxia has a very, very talented industry executive as their chairman. I don't know anything about any of the other people, including the CEO, but I can speak very, very highly of the chairman, Stacey Smith.
I guess what you just talked about, Liam, would apply even considering headwinds like the China-US trading tensions, for example. Kioxia itself said that it would have difficulty maintaining chip sales to Huawei, for example, due to regulatory restrictions that recently were activated. So does this still apply? Your sort of picture of the industry being largely unaffected in the long term by such developments, or is this more of a black swan kind of thing?
And particularly with regards to the U.S. trade war, I mean, it's just so complicated, right? So who can sell what to who and why not? And honestly, we get conflicting stories all of the time. If you talk to the U.S. equipment manufacturers and their last quarter earnings calls, each of them said we have no problems. We're not being restricted in any way. And yet we see different stuff in the media. When it comes to selling NAND, I honestly don't think that the US restrictions are going to have much of an impact here. Worst case scenario, you could envisage a mechanism whereby NAND makes its way through the spot market into goodness knows where and ends up goodness knows where. So I think it's extremely difficult to effectively restrict the sale of NAND flash chips into China. And in a rational world, they wouldn't be weapons in a trade war to begin with, in my opinion. I think more important is the perspectives on the development of NAND flash within China itself. And YMTC being the leading proponent, they claim that they've leapfrogged to 128 layer NAND. I'm very, very negative on this perspective or this story or this belief that they have succeeded. I think that they may very well have made a 128 layer chip, but where is it? Where's the 64 layer chip? Who's seen it? Who's tested it? Who's reverse engineered it? It doesn't exist. It's not there. I'm not saying that they haven't made a lot of progress with the technology, but the ability to ramp it up into huge volume like the other competitors simply is not there. I'd be interested to get your thoughts on that, any of the rest of the people on the panel. I guess in summary, my point there is that some people may be thinking that the development of NAND flash in China is a real threat and a negative for a company like Kioxia or Micron or whatever. I just simply don't see it, not within this decade.
Just to roll back to the trade war issue, something that I find pretty amazing is that it seems like here in the United States, and I'm in Silicon Valley, and the U.S. Department of Commerce has a viewpoint that there's a way to draw a circle around anything that's American and say that can't go to China. And it's nowhere near that simple because all of these companies are multinationals, and a lot of their work gets contracted out to other companies in other countries. And so, for example, the Kioxia product is designed partly in the United States and partly in Japan. And, so how do you draw a circle around that? And it's designed by Western digital employees in Japan, and by some Western digital employees in the United States, and by some Kioxia employees in Japan. I don't know if there's anywhere else that Kioxia employs people, but I wouldn't be at all surprised if they had designers in India and China and places like that. So, then is that product a US product? And you just don't know. Then where is it made? The chips for Kioxia are made in Japan. Well, the only NAND flash chips that are made in the United States are made by a plant in Micron that is dedicated to making chips in the United States for the US military. All other Micron product is made in Singapore, NAND flash product. And the stuff from Samsung is largely built in China. And so for US trade sanctions to really work in something like this really depends on somehow there being a tight definition as to what is American product that can't be shipped. And that's something that the Department of Commerce keeps trying things and they keep on not working. So I think that in the long run, this is something that's not going to impact Kioxia one way or the other.
Yeah, I think that makes sense. Just on Huawei, Kioxia actually did disclose customers to whom they sold more than 10% of their revenues, which included Apple, Western Digital, of course, and then Dell. So just the fact that Huawei wasn't on that list shows you what the maximum sort of risk they might be exposed to from the trade war actually is. So it is less than 10% and probably relatively significantly below 10%. I think the other thing is simply because they sell to Apple. I mean, if Huawei does suffer, that also means that potentially Apple could benefit in certain other ways, or whatever demand actually doesn't get consumed by Huawei eventually will be consumed somewhere else. So the long-term implications of this probably aren't that huge. I think the bigger impact will be in the very short term, and there'll be an adjustment period. How you exactly impute that into valuations is a bit of a question mark. I think with the valuation being relatively high, I think there are certain risks. The other point I'd make is just on what Liam was talking about in terms of YMTC. I think the experience from various other technologies that China wanted to develop is just that a lot of the companies seem to be willing to tolerate losses from very low yields. So I think the question isn't necessarily so much about whether they've actually demonstrated sort of a proof of concept or like a trial product. It's exactly how low are the yields and exactly how long can they kind of subsidize production for, which usually goes initially to Chinese customers and then potentially to Chinese customers probably selling internationally. Whether YMTC can actually do that or not, I think it certainly hasn't been proven, but I think the biggest risk from that is probably whatever customers Kioxia might have in China who would be willing to purchase from YMTC, with YMTC potentially being willing to sell at a loss. So I think that is the risk, and it's probably not an enormous risk, but it is something that people should be aware of.
I'm fully expecting to see YMTC sell at a loss for an extended period of time if that's what they need to do. And if they don't change their current course, I would expect for them to continue to sell at a loss for years.
Well, we're just coming up on time. So I don't know if you had any final thoughts that you'd like to share. Maybe if we just kind of go around.
Okay. Yes, with regard to NAND flash in China, maybe it's instructive to look at DRAM in China. It was reported that the first entirely Chinese-made DRAM products have appeared in various products in markets in China in the past few months. Okay, so they can make a DRAM. So what? They're going to catch up with Samsung when? In 100 years? The scale is so small, and they are so far behind, and they're up against a highly advanced cash flow machine with the best engineers in the world. This is probably not a major threat. The political issues, I think, are more important. Since Toshiba, Kioxia is associated with Western Digital, the American government probably can interfere. But NAND flash sales, as I think Jim mentioned, they can go many directions and then be sold on and nobody knows where they went. So perhaps that too is not a major concern.
From my point of view, I think that the next couple of weeks particularly, so we have Micron with results on September 29. SK Hynix will be coming shortly after the IPO deal. You know, if there's bad news, I mean, if the launch itself goes well, the markets are extremely turbulent right now and very reactive and very negative on companies like Micron, Western Digital in particular. They seem to be getting a bad deal. So I just have the sense that even if the IPO itself is successful, it wouldn't take much in the time period shortly after the IPO for the shares to have a pretty tough time of it. So it's just not a great time to IPO. That's the bottom line.
Yeah, I'd say that if Mio is right, then you know, if they're asking for too high of a price now, that would be a frightening prospect for an investor to go into something that was overvalued and then immediately have the price of NAND flash drop further or some other negative indicator. For example, when Micron reports, you know, that'll be an indicator of where things are headed. And then about a month later, we're going to have reports from Samsung, SK Hynix, and then a month after that from Kioxia. You know, all of those could end up putting downward pressure on the stock's price. And so, you know, having the IPO in early October seems like that would be maybe not the optimal time.
Yeah, I think just to sum up, as everybody mentioned, I think there are a lot of short-term risks, and therefore it doesn't, the risk reward for participating in the IPO and also holding the stock short-term doesn't seem to be particularly attractive. Given what Liam mentioned about, you know, having strong leadership in terms of their chairman and also potentially turning around the quality of management of a business which has some technological promise, I do think there is probably value there. So I think it's definitely worth investors keeping an eye on if, say, NAND prices do collapse and the stock price goes down a lot. At that point, it could start to become a lot more attractive. But I think the main issue with the IPO as it is valued presently is that the risks aren't discounted enough. So I think as an investor, what you really want to do is wait for all of this bad news to come out and hopefully for the stock price to drop a lot. And at that point, potentially you could be investing in it for some of the longer term upside from, you know, more nebulous positives such as improved leadership.
Well, thank you very much, gents, for your insights. And thank you, everyone, for being with us today. If you have any questions, please email us at research@smartkarma.com. Look out for the webinar recording on the registration page shortly afterwards. And gentlemen, thank you very much once again for your time today.
Thanks, folks. It was most enjoyable.
Thanks, Michael.